Hello, welcome back. This is SeeWing Yee from the Yee Real Estate Network. And today I'm going to do something very interesting. It's going to blow your mind. So I'm going to compare our new construction duplex, okay, versus a comparable property. I mean, how much it costs to buy. It's a sort of an apple to apple comparison. Compare our co-living new construction duplex versus a traditional apartment building. All right. So it's absolutely amazing. So at least in my opinion. So please share your comments below. Let's see what you think. And also like and subscribe to my YouTube channel as well, and put your email into my website so you can become a free member of our real estate network so you can learn more about this type of investment models and other investment opportunities. All right, so without further ado, let me quickly share. This is our iconic new construction property. 14 total bedrooms, 14 total private bathroom, 1-to-1 ratio. In case you don't know, I have done a lot of YouTube videos so far on co-living, and co-living investment model has been skyrocketing all over the country. But our unique model is the best type of co-living model out there in the entire country. That is just my humble belief. So anyway, once you get to know our methodology, our investment model, then hopefully you will concur with my uh, belief. All right. So again, let me go share. This is our investment model uh, uh, in Jacksonville, Florida, of course, which is one of the fastest growing housing market in the country. And this is the price point. I'm not gonna go over too much detail, but I'm gonna do apple to apple comparison. 7 units, 7 rooms, 7 private bathrooms, 1-to-1 ratio, which is amazing, by the way. Well, before I begin, I believe we are the leading producer of turnkey new construction co-living model methodology. There are very, very few. I don't know. I might guess it's only maybe 1% of all the co-living houses in the country are new construction, 1-to-1 bedroom to bathroom ratio, which is amazing. Okay, which is much better than those regular co-living houses that typically have like 8 bedroom and 2 bathrooms. So you have like four tenants sharing one bathroom, which is not a good ratio. So again, we have the highest return based on our unique purpose-built new construction model, and this is just a tip of the iceberg. So without further ado, let me go ahead and do some comparison. So our purchase price and our gross rent, we charge like at least $1,000 per month per tenant per bedroom. All right. So do the math, very simple math, right? Total 14 doors, 14 units, 14 rooms on both sides, 7-7 on one unit and 7-7 on the other unit. So the math is we charge before debt obligations, before expenses. Look, I'm just going to go over a very, very high level apple to apple comparison. Okay. Uh, so we're getting like in excess of $14,000 of rents collecting from 14 tenants, right? Multiplied by 12 months, right? So the gross rent we connect annually, if you were to own these duplex, for example, is close to $170,000, right? So 40 excess of 14,000 monthly gross rent multiplied by 12 months, it is almost $170,000 annual rent before expenses. At the end of the day, look, you can get a $5,000 monthly net cash flow, which is absolutely incredible. So look at the cap rate. The cap rate is 16%. Any kind of multi-units on a traditional multi-units, you're lucky to get 4 to 5% capitalization rate, right? So agree with me, make comment below. But okay, I want to keep this in mind. Okay, you're collecting 14 grand in monthly gross rent, around close to $170,000 annual gross rent at a cap rate of 16%. So let's do this high level apple to apple comparison versus our model, co-living model versus the drum roll please. And we are comparing against, I just happened to scour other multi-units in the country, and I happened to pick San Diego. I don't know. I could pick any comparable apple to apple comparison versus our duplex co-living model. But I happen to, because I live in California, in San Francisco Bay Area, I might as well just compare to a property in San Diego, California. So this property in San Diego, California, again, are collecting around $170,000 in annual gross rent, similar to our $600,000 property I just mentioned. But this property, this 10-unit property, is collect is the purchase price is $2.5 million at 4.28 cap rate. All right. But wait, there's more. Okay, this is a purely apple to apple comparison. All right. Of course, here are I obtained this information from this LoopNet, right? LoopNet is a commercial investing multi-unit website, nationwide website where you can you can pick specific property you want to buy, whatever, right? Multi-units, apartment buildings, commercial, whatever, which is LoopNet. So you can look at the details of this property, and you scroll down. Another differences between our duplex, 600 grand new builds, co-living property, new construction versus most multi-units in the country, including this particular property in San Diego, are built like almost 100 years ago. That's fine. All right, that's fine. Building size, yes, our duplex is each side like it's 2,000 square foot, so total 4,000. So similar square footage. Okay. And we are, our investors paying only 600 grand for the purchase price of our duplex in Jacksonville, Florida. If you were to buy a similar gross rent property in San Diego, it's 2.5 million, right? So our down payment we pay for our duplex is like $170,000 down payment, which is 25% down payment to buy a $600,000 co-living new construction duplex. But in this case, if you're gonna buy comparable property, 2.5 million at 25% down payment, we're talking like $650,000. That's right, $650,000 of down payment to finance this 10, no, actually maybe more, even more. And you're not getting a 30-year fixed rate mortgage either, because our lender in this co-living property, our investors doing like a DSCR loan, debt service credit ratio loan at 25% down payment, 30-year fixed rate mortgage, and interest rate are very, very competitive versus the conventional lending interest rate that they are charging for investment loans out there. So when you buy anything higher than a 4 unit, you're getting a commercial loan. A commercial loan is not even a 30-year fixed rate, right? So anyway, in terms of the low investment loans, there's no comparison. When you buy a 4 unit or below, you are paying the Fannie Mae lending guideline 30-year fixed rate mortgage, which is a much better loan than a commercial loan, which is not a 30-year fixed rate. That's one of the value associated with our model, our co-living duplex model. Okay, let me share you some more. So in terms of building class, the quality of the construction of the building, this 10 unit in San Diego is like I said, is a C class, right? I mean, our new construction, the property itself is A class because it's brand new, right? That's how people categorize it. All right. And finally, now some of you are thinking, now the eight on this 10-unit building in San Diego, they charge like $1,400 per studio unit at 425 square foot. So we charge, per room, like 300 square foot per room. Okay, on our duplex, we have 14 total rooms, as I stated. around a little bit, around maybe $1,100 per month, couple $100 lower, even though Jacksonville, Florida, the cost of living is a lot lower than here in San Diego, right? In this case, in San Diego, the studio only renting for 1,400 in a very high cost living area of California, San Diego. Yeah, and the square footage is a little bit higher, on this studio apartments, studio units. Of course, they have two units or one bedroom, which they charge a little bit more. But so it's almost apple to apple comparison in terms of the individual unit that we have within our 14 bedroom, 14 bath unit duplex co-living model. So yeah, if you I just calculated, okay, this annual rent on this 10 unit are pretty much equal the similar gross rent to our model, right? And of course, again, our duplex is $600,000, which is like 4 times cheaper than the San Diego comparable 10-unit apartment. And of course, lower costs. Of course, we have lower costs. We have a warranty with new construction, lower repair, lower maintenance over time. That's pure total great value. So, okay, at the end of the day, co-living model is skyrocketing in growth, but most of the co-living model are, like I said, is not one bedroom to one bath ratio. Most of those renovated older co-living properties are, like a 8 bedroom, 3 bath, maybe even 8 bedroom, 2 bath, where you have four tenants sharing one bathroom, but we have a one-to-one ratio. Beyond the purpose of this short video is to compare, you know, all you need to do is have about $170,000 of down payment, closing costs, and a few other things for to purchase a brand new co-living property for 600 grand and getting a $5,000 monthly net cash flow, after you minus all the expenses and debt obligations. You're spending 170K instead of a $600,000 down payment to buy a 10-unit property in San Diego that equals have the same gross rents, and I'm not sure about the monthly net cash flow. I did not calculate all the way through on that San Diego 10 unit. But so the recap is the takeaway for you guys is not only from an apple to apple comparison, buying our amazing new construction model, which is the return is so high. It's not really an apple to apple comparison, right? I mean, I'm giving you all the data, but beyond that, uh, our co-living model is just any kind of co-living property in the country are all doing well, but our unique investment model, new construction, co-living type, one bedroom to one bathroom ratio is the what you call it is a game changer. Okay, the return is so high. Plus, we do it in a turnkey way. Turnkey means is almost passive. You as an investor, if you qualify to buy this kind of property, you just you buy it and set it and forget it, and let our pass split marketing team do all the tenant uh, uh, acquisition and the whole 9 yards. Then we have a co-living property management on top of that to do all the work for you. So you are pretty much almost a passive investor, right? So potentially you can scale a single family home. We have another floor plan, a single family home co-living model, 7 bedroom, 7 bathroom, right? For 320K, right? So we have two great investment model, which will clear cut beat any other multi-units in any part of the country anywhere. So that's the value add that we're getting, and our investors are really, killing it. Okay, they are all in to buy this type of scaling, this type of turnkey new construction co-living model, tremendous return. One more thing I want to share with you, our occupancy rate so far across our portfolio in Jacksonville, Florida for the past 1 year. We have a number of investors who have purchased who have financed these turnkey co-living models, the occupancy is pretty much 100%. All right, I know it's not going to be 100% forever, but and also the evictions rate is less than 1%, and our tenants for this 14 room type of unit stay like at least 6 to 8 months, months. Okay, and like 30% of our member tenants, they stay beyond 1 year. So so if whenever there's a turnover, okay, our host and our property manager and the cleaning team, they spend maybe a couple of $100 to clean out that one bedroom on a normal turnover of tenants, and then past split, our marketing team will remarket the property within 1 to 2 months. I mean, 1 to 2 weeks, and we can get another tenant in. So you'll never have a vacancy really. A very, very, you're always going to cash flow, right? Because out of the 14 doors on this duplex, I mean, maybe you have 2 or 3 vacancy at any given time. And even with that scenario, you still cash flow on a monthly basis. All right. So there's much more to talk about, but today I'm just going to keep it high level. And that's all I want to share right now. Just to do an apple to apple comparison is not really an apple comparison, as you can see, based on the numbers. So amazing, skyrocketing growth in co-living property, and we have the best type of living model. So if you're interested on remotely interested, please contact me directly. We can do a complimentary consultation. If you want to learn more about it, again, put your email on my website, yeerealestatenetwork.com below. And so you can become a free member of our real estate investment network, and you can then several times per week you will receive in the morning in your email inbox. You learn more about our turnkey co-living investment model, opportunities, amazing returns, very low risk, the whole 9 yards. And of course, we have other traditional long-term rental opportunities. It's a matter of just networking and be in a group of become our free member. So you be a part of a like-minded group of investors who are motivated to buy rental properties, to scale your properties, and achieve early financial freedom. All right. So if you receive any value whatsoever from this video, please like and subscribe to my YouTube channel, and also become our email subscriber, free member. All right. Thank you so much. This is SeeWing Yee. Thanks for watching. I will see you next time. Have a nice day. Bye-bye.